What is going on, YouTube? It's that time for the Sunday kickoff show, my friends. So take a break from playoff football. Watch this video because it may help you set your trades up for this week. Very interesting week ahead. The CPI comes out Thursday. The markets have never bottomed, ever. Historically, before a recession. The markets have never bottomed historically while the Fed is still raising rates. The markets have never bottomed with inflation above 5%. So all three of those factors are in play right now. So I'm expecting more decline. The question is, do we get a breakout pump in Bitcoin and any of the indices, or do we start just rolling over? We're going to go through the charts, guys. We're going to click through some charts and see what we have. And I really do appreciate you guys taking time out of your busy Sunday or your relaxing Sunday to watch this program. Definitely do like and subscribe. Check out our two sponsors, BITGET for all the cryptos, link in the video description. SimpleFX for the equities, commodities, Forex, and Bitcoin, and some cryptos, a decentralized exchange offering up to a $5,000 bonus and 1 month paid of Market Makers membership. If you want to take advantage of that offer, download SimpleFX, the link in the video description. Take a screenshot of your $1,000 deposit, send it to us on, I guess, our Telegram in the video description, or in Discord. You can send it that way as well. Let's jump into this, guys, see what we got. Let's start off with a little bit of news because the World Bank is warning of a coming global recession, right? We've been talking about this on the channel for over a year. You guys know this watching this channel, but Amazon just announced some big job cuts. Amazon just cut 18,000 jobs. Salesforce just cut 10% of its workforce. Vimeo cut headcount by 11%. It's not just tech workers. Goldman Sachs just cut 4,000 bankers. This is just the beginning, guys. This is the beginning. Remember, the S&P is not even in a bear market. It's down less than 20%. If you're going to go off a Dow theory, it's down less than 20%. But just to visualize this, Amazon's exponential workforce growth, look at their 2019 high. 2019, they had just about 800,000 workers. And then obviously everybody ordering everything from home went up to 1.3 in 2020 and then 1.6. So just to get back to pre-pandemic numbers for Amazon, you're talking about a 50% reduction in workforce. Not saying that has to happen, guys, but again, global recession, people have less money, more people are unemployed. And by the way, that's the goal of the Fed. The Fed has point blank told you unemployment needs to go up, job listings need to be removed, meaning you have too many open jobs because inflation is becoming embedded. It's becoming embedded in certain sectors in the marketplace, and it's not just going to go away. So it's going to be a constant battle. I expect inflation, this next CPI, inflation is supposed to come down to 6.5%, I believe. But, just to put this in perspective for you guys, I know a lot of you guys watch some of these other channels that focus really deep dive on these subjects, but the 1970s, inflation was up, the way they measured it, of course, then, which is different than now, but inflation was up 13%, like 12 spot something, just call it 13%. It came all the way down to 4.81%. And of course, everybody said inflation's dead, Fed would cut rates, and what happened? Inflation went back up. This went over and over throughout 1970s. You lost the whole decade. This is what Powell is trying to avoid. He doesn't want inflation to come down to 5%, 4%, start easing financial conditions, markets go up, prices then go up again, and then what just happened? We just wasted a couple of years fighting inflation and have to start all over again. That's what he's trying to avoid, which is why he keeps saying he would rather err on the side of being too aggressive fighting inflation. Of course, all of this could have been avoided had they raised rates reasonably in the very beginning, as you guys know. Looking at the VIX, guys, I don't track the VIX closely because I think there's a lot better ways to track volatility in marketplaces, specifically with indicators on the assets that you're trading. But the VIX does have a nice chameleon pattern that formed here. If it holds this high or low, I'm looking for a move up to almost 27 on the VIX, okay? That's what I want to see, is a move back. And of course, if the VIX rises, market volatility will increase, which most likely would be dumping in this case. Looking at Bitcoin, guys, and then we're going to go to the equities. And if you look at Bitcoin here on the weekly time frame, important dates to pay attention to is the coming spring equinox, which is March 20th, 2023 on the weekly candle. And then, of course, the fall equinox, which is the actual days, September 23rd, but it's on that September 18th candle. Because as you guys know, I do think this will be a bottom and then the bottom, okay? That's what I'm looking at for Bitcoin. And you can see Bitcoin right here going sideways just after the nothing Santa Claus rally that happened for Bitcoin, the midwinter solstice, okay? Clicking forward, Dante's Descent, we are on our 20th bar, the pivot bar. Could this next bar go up? I mean, it can, just like on this pivot candle, it actually made a high, but then obviously finished the week down. We could see the same thing next week as well, where price rises and then finishes the week down. So we'll see if this plays out, because it's been playing out since the all-time high, as you guys know that watch this channel. Don't want to rehash all this. Watch Harmonic Decay from, I guess, a week or so ago. I go in-depth on these patterns, but on the topping pattern here for Dante's Descent for Bitcoin on the weekly time frame has been dead on, netting these massive trades, 64%, 40%, 30%, or actually 28%. So big trades, guys. As you guys know, we passed our 20 bars here, our top here for 140 days. On the weekly time frame, we're on the pivot bar right here. So we'll see what happens on the weekly here. If we do get our rise up, I'm expecting that pump up, and we're going to go over those numbers, and then the decline, okay? And then the decline. Daily time frame, we've passed it in a single day count, but that's not uncommon because, again, transitioning from a weekly time frame to a daily time frame, the difference in bar counts, the key thing being trading in that square of 144 trading square is what the summation of days comes out to. Been over all of this math, okay? So this is what we're looking at here still. We'll see where this goes. Of course, if we look at this in some TA perspective, the market maker's caterpillar, triple layered Bollinger Bands, this hot pink line is my trend VWAP that's built into the caterpillar. It's adjustable. I have mine set to 144, and that gives us a price, right? A volume weighted average price of about 18.5, 18.6, somewhere in there. So that's where that price is, saying that's the actual value of price. Of course, we're trading at 16.9. Now, this is significant for a couple of reasons. We're going to look at it on the weekly time frame, but the compression, guys, is insane, okay? Much looser compression here for the 18% move up, 28% drop. This is super tight, okay? This tells me we're going to have an explosive move, I think, to the upside and then to the downside for a big dump to find that first false bottom in the spring equinox. And if we look at this on the weekly, the reason that number is very important, that 18.4, 18.5, because 18.550 takes you right here to the top of the channel for your fifth wave touch before you descend, okay? I still think this is how this is going to play out to a T, and you can see that here. What you would be doing is back testing on the weekly time frame the one spot 272 at 18.411. Right up here at point C, giving you the spot 5 ratio. The harmonic expansion of that is 2, which brings Bitcoin down to the one spot 414 at 12,747, or the actual target of that pattern, 12,500. That's where I'm thinking we will be by March, guys. Could go lower, could be shallower of a drop, but this is what the pattern is telling me where we're going to. 12,500, looking for the move up first to at least 18.4. And as you guys know on the daily time frame, using a VWAP here from the market structure that we've been trading in since June, right? So this is June on the daily time frame, and the VWAP gets you up here right about 18,953, so almost 19K, and your 200 moving average on the daily, which we have not touched since Bitcoin was 48.2, okay? Last spring equinox. Haven't touched it since. You're at 19,153 potentially if this thing keeps coming down a little bit more, but the 200 is right at about 19.5, 19.6. So would love to see this break out and give us a scam wick up to that, just to hit it, just to kiss it, because if we fall over before that, I said this last video, this could be a very long time before you touch this target. Let's look at a couple things here. Your money flow is in the bullish area. Volume's okay. Volume's good. Money flow's bullish here. You're well under being overbought, so you have plenty of room to move up, and you don't need it to move up a lot to get a drop. Again, 18% move. Got this you got the MFI divergence. Your volume weighted RSI gave you guys that trade right here at the X point, 28% drop. Okay, so lots of things to watch this week with Bitcoin. And today, obviously, you could have some movement today. But with the CPI coming out Thursday, maybe this is the psychological factor that's going to juice everybody up. Remember, inflation is super high, regardless of whether it's 6.5, 6.9, 7.2. That number doesn't matter. Remember, these are aggregate numbers. So prices are continuing to go up. Okay. If inflation, the Fed has a target of 2%, which did not exist until 2012. This isn't some target that's been around for 100 years. Ben Bernanke invented this target. But just remember, that's prices going up, compounding. Okay. That's a compounding factor. So month after month, as you keep getting inflation increases, they expect for core, for instance, I believe they're expecting 0.3 or 0.5 for this coming CPI. That's spot 5 on top of last month's increase, on top of the months before that's increase. It keeps compounding, which is why when you go grocery shopping, you see the prices continuing to go up, the portion size getting smaller. So again, the Fed has no plans to do deflation, meaning run negative, right? Because we've been above the 2% target for some time now, since 2021. Summer 2021? We've been above the 2% target. So you would think if they want to average at 2%, then you would need multiple months, potentially years, of sub 2% inflation, right? Negative. You want deflation to bring everything back down. But they're not going to do that. They're just going to settle with trying to get down to 2%. So all those prices that have risen, what is the catalyst to drop those prices? The World Economic Forum saying we're going into a global recession, warning of a global recession, mass layoffs, people losing jobs, people using credit cards, $31 trillion in debt, $6 trillion in stimulus printed in just under 2 years, guys. This is how you get these super bubbles, and they always explode fantastically. Don't confuse smaller time frame market movements like the daily, even the weekly. You have to think big picture here, how 2023 is going to play out, because everything will be cheaper. So again, Holy Grail target hitting that 200, expecting at least to get to the 18.4. Okay, that 18.4 level to kiss that channel to give us our fifth wave touch. But if we do break out above that, really watching the 19.153 and specifically that 19.5, the kiss to 200. Okay, so looking at this on the 4-hour time frame, we pumped above the 200, had a nice bullish cross on the 5 and 21 volume weighted moving averages, got above the I guess that's the 233, and then we fell back below it. But you're back above your long-term moving averages here on the 4-hour time frame. Money flow peaked out, came back down for a back test. We'll see if this continues. I do expect it to move up, guys. That channel compression is super tight. If it does just cave in without getting that fifth wave touch, I'll be surprised. I mean, is it impossible? No, you got to be open to all possibilities. But the probabilities for me are for Bitcoin to complete that pattern, 18.4, 18.5, and then do its descent. Okay, that's why patterns exist. That's why you can go buy TA books and they show patterns, triangles, wedges, because they play out. Do they play out every single time? No, but again, higher probability that it could or will play out. Let's look at the S&P, guys. Again, a lot of history happened here on the S&P. January 3rd, 2022 was Earth Perigee Day, and January 4th made our all-time high. After that, it was nothing more than decline. S&P's down like 19% right now at the time of this recording here on Sunday. And of course, we had the anniversary of making our all-time high. On the same day, January 4th, which was Earth Perigee here in yellow, it's the same weekly candle that we just finished with the new weekly candle opening. So you see your weekly candle for Perigee, sell off. Will this next candle be a sell-off? You know, the market's going to want to rally, psychological factor. factor if the CPI is lower. So it really is going to be interesting to watch the markets, how this plays out. Notice your 50 and your 200 on the weekly time frame. At some point when you get dissension, these are going to intersect and you will have that death cross, okay, in a weekly time frame. The other indices look a lot worse. But let's look at the S&P. Where'd the S&P pump to? Well, for people that think TA doesn't work, you pumped right up to the 50 and got rejected on the daily time frame. Look at that. On the actual moving average, pumped up to the 50. You're in this mini cost structure. So the S&P and the Russell, guys, it's important to note this, okay? So you're holding, let me go over your support. You're holding the 46 at 38.03. You can see all the candles stacking here. Below that's your 618 at 37.22, 36.68, one fib at 34.89. Remember, I think the S&P is going to be going down to those targets that I went over in my video after the harmonic decay video, but roughly whatever that was, 3100 off top of my head, somewhere at 3150 in that neighborhood by March. But this is very important to understand. The actual market structure here, if you ever read Profits in the Stock Market by Gartley, this pattern, this is what inspired the Gartley pattern. This pattern can be a very bullish pattern when it breaks out to the upside, okay? I'm not going to use that wick again. And then we'll come back down here. And this would give us our move here. Let me go ahead and get the A equals C move of the market symmetry of where this would go. And the one fib would be the target, 43.74, if this pattern were to play out. Okay, this would be the chameleon pattern. But if this pattern were to play out, that's where it would be going to. And that's your XA leg, accelerated volume, volume down, A to D, and this would be your CD leg where it would move up. I don't see this happening. Okay, I've told you this before. People are asking in the comments, how come you're not talking about double bottoms? Because I don't see this playing out, because clearly the 200 has been your market top in this decline. And going backwards, the weekly 50, which you got wicks above and fell apart. This would require you to flip all of that when we have an incoming global recession. Can you get volatility here and come back up and backtest your 200, 233 at roughly 4,000? Absolutely could. You could absolutely do that. Could you go higher? Yeah, I think 4140, that 4125. Remember, this is the big Fed wick. That would be your absolute cap. What I think is more likely to happen, barring some ultra low CPI print, is maybe get some wicks up here. But again, I expect all of this to start rolling over. The Santa Claus rally euphoria has faded. The midwinter solstice rally, as I call it, because that's what it's based on when everybody talks about seasonality in the marketplace. But that has faded. Those 6 strongest trading days in the market are now behind us. So limited volatility to the upside, much more downside risk. And if you keep up thrusting like this in these little mini cough structures and you don't get any progress being made, you're going to fall out of your little mini cough structure. Here's your up thrust, okay, and then you're hitting the 50. You're going to fall out of this, most likely back test the box, and then start rolling over and coming down. Again, volume is not very good here. You want accelerated volume for an upside move, just like you had on the downside move, and you've had volume down left to right with the exception of selling, okay? So that's the S&P, the broader market, currently getting rejected at the 50-day. If we look at the Russell on the weekly, again, just like Bitcoin, guys, they made their all-time highs within 48 hours of each other. 20-bar tops all the way down after every single top that was formed. Sell off. These are big moves. Again, 17 to 20%. Big move down. Big move down. And this is calling for, we're on that 20th bar, which was this past week. So this next weekly bar, again, it can go up, but it should finish red if it's going to complete this pattern, okay? If it's going to complete our Dante's Descent topping pattern here, it should finish red. So you can have a push up initially, but the candle itself needs to be red. In this one here, you can see you had a big push up, finish as a doji, next candle, boom, big sell off. So again, looking at this in a macro sense in the weekly time frame, this next candle should be red for the Russell. And if we look at this on the daily time frame, oh, this is still weekly, I'm sorry. You have the 50 weekly moving average. See how that provided your top? So again, just like with the S&P, if we get a low print, could you have more upside volatility? Once again, absolutely, you could have upside volatility. Where's your cap? Your cap is 1863 based on that weekly 50, okay? Notice how close your weekly 50 is getting to your 200, 233. This is going to cross, and this will be a death cross when this happens, okay, on the weekly time frame. More decay is ahead, guys. If you are only watching permabulls like Tom Lee talk about how markets are going up, I'm just telling you, again, it's my perspective, basically the Kodiak bear, right? But it's my perspective, having lived through and traded two of these bubbles. This is playing out just like all the other great super bubbles if you follow market history. And this is going to decline further. Everything will be cheaper in 2023. So limited upside potential, much more downside is likely. Okay. And we're getting rejected right now at the 233 on the weekly time frame. If you want to head and add it to 300, look at your 300 moving average. That's what you're bouncing off of. So you're stuck between the 300 and the 233, just like you were here. You broke out to the upside, failed, got below the 300, broke out above the 200, 233, hit the weekly 50, failed, making series after series of lower highs. And if this thing rolls up like this and does this, you just made another lower high. More market dissension would be coming. And if you look at this on the daily time frame with that transition over, again, we can push up on this pivot bar, and then the next bars should be dissension bars, okay? Big drops based off this pattern. So let's see how this plays out, because tomorrow is a full trading week, and we're going to see, I think, so we're going to see volatility for sure because of that CPI print. So will it end up just being another one of these big wicks like this, where it's just a big pump and then selling off the same day? I don't know. That's how they've been playing out. So we'll have to watch and see. But the Russell, just like Bitcoin, or just like the S&P guys, has this potentially very bullish pattern. Okay, this is the same type of pattern structure here that you have, and you can get this measurement. Let's go ahead and get the 100% of the move here. 1988. Okay, so if the Russell did want to break out, but again, you'd be above the weekly 50. And when you look at your market history, this is why it's so important to do. 1988 would have you, look at my cursor, you would have you way up here, okay? You haven't done that at all since the all-time high. Once you fell under the weekly 50, you've never gotten above the weekly 50 on a candle close. So you would have to reverse this whole trend. And with a global recession incoming, with 40 countries having double-digit inflation, is it likely? Again, is it possible? Yeah, it's possible. Is it likely? I would say the probability is very low. And actually, I have a short on the Russell, as do some other people, in that 1790 range, 1790 up towards the 1800 range. So I think what the Russell could do with upside volatility here is potentially come back to test this daily 50. You could come up to that daily 50, come up and test the 200. You see the Russell's capable of getting above the 200. I don't expect any big upside moves, except maybe a swing up and then coming back down again, making a lower high in the range once again. Okay, that's what I'm expecting. So could totally be wrong. I don't think I will be, or I wouldn't put a trade on, but that's what I'm looking at, guys. Limited upside potential, much more risk is to the downside. And so just to give you those downside targets again, because the upside targets, as you can see, let's go ahead and do a fib retracement, because we like to trade the Russell on this channel. You're hitting the 382 at 1787, the 46 is at 1807, and the 618 1831, your 200's below that, okay? Your 200's below that, and here's your 50 on your daily, right? So your 50 on your dailies down here, and again, these are about to cross too, guys. So, this is just something, this quadrant right here between the 486 at 1807 and 1831. Notice how the pricing structure just keeps getting lower. There's a lot of resistance right here. A lot of resistance. We pulled the multiple fib waves so you guys can see that. So I don't anticipate this going above 1831, even with upside volatility. Pressure from a potentially low CPI, which again, I have no insight into how low the CPI will be. Nobody is supposed to know until the date it's actually published. But downside is much more likely away from here. Let's look at the money flow and everything. Volume is low. VROC died. Okay, that dropped off and went negative on these pump up. So again, the volume doesn't look good on the Russell. Russell is still trading at a very premium PE, whereas the other markets are all around 19, 20. Russell is substantially higher. I mean, I haven't looked at it recently. It was what? It was at 70 in September. So, you know, it's still substantially higher. Lots of garbage companies. Looking at the NASDAQ here on the weekly. Weekly, you're getting rejected by your 233, just like the Russell, right? Again, NASDAQ looks really weak. Your 200's above you, closer to 11,540. Your 50's moving down on the weekly. But again, you have that same structure. You have your low, your higher low, and I could draw that pattern out again for you guys. But there's not a point in doing that because I'm not trying to make a hopium video. I mean, it's a potential target if you turn bullish. So we'll make other videos, obviously, between now and then. But again, looking at the downside, because the downside is much more likely here. Even if you do get some type of pump up, you're going to roll back over. Downside, you know, you got to look at your 10,812, which is just beneath you. The one fib at 10,427, big one here. And then 1618's at 9,313, right? That's just from this fib retracement of this wave. Gave you all the specific targets for the March equinox bottom in the other video. So watch that on the channel from last week. Looking at the NASDAQ on the daily. Again, we pumped up above the 45, right? But you see this clearly defined range you are trading in here. You see this range? You have this range here, this little mini cough structure that you are trading in. And you have an up thrust, you fell back down for a down thrust. Limited sign of strength, got caught up on the 45, came back down. Got an up thrust, fell back down for a down thrust. Now you got an up thrust again, that blue wick above your little mini cough structure, above the 45. Where's it going? Well, I think your ceiling on the NASDAQ is 11,400, where the 50 daily is. Okay, you see that? Because you're struggling mightily to get anywhere near up that. So we'll see. We'll see, but this looks to me, again, downside is much more likely. If we look at this on gold, okay, so gold, we have our targets here I'm looking at for March. If gold does top out here, I'll take this pattern off in a second. I'm looking for that 1450 on gold. Again, just using that same equinox date, the late March, which I think is March 20th this year to early April, for gold to come down for its bottom. And let me go ahead and take this pattern off. And we're looking at the different waves here of the 618 resistance. You got above it here on the 618. Now remember, these will move with the market. So if the markets do want to rally up a little bit more, like I said, gold can poke its head up. But I think you're building a distribution box ultimately with gold, just like this. And you will top out in this quadrant and then roll back down again, okay? So I'm looking at that bottom target. And then silver, of course, we showed some different applications of TA here. Trend line, which you failed from, the pattern, which gives you a harmonic structure at the one fib of 15.88. And again, I'm using that late March, early April time frame for silver to come down to. If we remove the pattern, you can see your candles look to be making a distribution box here in Wyckoff, which could end up coming into a double top type structure, and you just made your first hump of your double top, if you will. See if you come back up and back test the trend line, and then come back down and start breaking down again. I'll be looking for a trade setup in here as well on silver. Silver, in my opinion, is more fun to trade than gold because it is more volatile. Silver went down 60% in the great financial crisis. Gold went down 34%, but they will recover. Remember our mini cycle that I showed you, that mini cycle of recovery for gold and silver during the overall crash. You can watch the gold and silver targets from my last video for 2023 to do more of a deep dive. All right, guys, hope you enjoyed the video. Leave your comments, questions, love, all that fun stuff in the YouTube comment section. I will respond as always. I hope everybody had a fantastic weekend. Take care, everybody. It's going to be fun, guys. Volatility is always fun, whether you're bullish or bearish. It is fun to be in a trading environment, and that's what volatility gives you. See you next video, everybody.